Hey everybody, Matt Clark here, your host for the Bull and the Bear podcast on moneymarkets.com. Glad you are clicking on this video today. I'm going to take a little bit of a different track today. Not necessarily going to talk about any particular segment or stock or anything like that, but this is a video that we're going to start doing more of these in terms of videos to talk about different topics that are prevalent in the market, whether they be different stock indexes, different ways to buy certain commodities like gold or bonds or something like that. What is, it's basically our Money in Markets 101 series. And we're going to do a good number of these over the course of a while. But I want to start today. It's a little obscure, but there's a reason behind it. In the last 3 months, since about mid-March of 2020 until June 4th, the Russell 2000 index is blowing its other stock market indexes out of the water. It's jumped about 50.3% today, notwithstanding. And so that's why it's kind of important to know what the Russell 2000 is and how it works. The Russell 2000 is one of those that you don't really, it doesn't grab the big headlines. It's not the Nasdaq, it's not the Dow, it's not the S&P, but it's very much the same. Basically, the way the Russell 2000 started is it was an index that was created by the Frank Russell Company back in 1984. It's made up of the bottom 2/3 of companies that are listed in the Russell 3000 index. Now, that's an index of publicly traded companies that are representing close to about 98% of the investable U.S. stock market. So what the Russell 2000 does is it takes the bottom 2/3 of those companies and it tracks it as an index. Now, it represents a broad scope of small and mid-cap companies, and it's widely considered to be the benchmark for mutual funds, and it classifies themselves as small-cap mutual funds. It's similar to how the S&P works as a benchmark for large-cap stocks. So you've got the S&P that tracks large-cap stocks. Now you have the Russell 2000 that is mainly used for small to mid-cap stocks. Several mutual funds and exchange-traded funds are tied or based on the Russell 2000. Now there is a way you can find it. You can click on it. We'll have a story posted on Money in Markets that you can see all the 2000 companies, and these do vary. They're not the same 2000 companies all the time. Some drop off, some come on, and so it does vary from time to time. Now, the way it compares to other market indices is that the Russell index is weighted by shares outstanding for the companies that are listed. So it means the stock price and the number of shares that are traded can influence the index. It's different from the Dow. The Dow is strictly a cap-weighted index. So that means that the Dow is reflected by price, and any companies that have a higher stock price will weigh heavier on that index. So, but whereas the Russell's concerned, it's a little more even. So because it takes the shares outstanding into account. So it doesn't necessarily mean that a higher price share will have a larger impact on the index. This is much more universal than that. Another big difference between the Russell and other stock indexes is that it benchmarks small cap stocks. The Dow and the S&P are large cap stocks. The Nasdaq is very tech heavy. So you have here a very directed, a very pointed look at small cap and mid cap stocks. Now, there are ways you can make money with the Russell, but bear in mind, it is an index, it is not a stock. So you cannot buy it directly. There is no Russell 2000 ticker that you can go to your brokerage account and buy into. So one way you can make money is you can buy individual companies that are listed on the Russell 2000. So you can go and you can do any kind of research you want to, and you can see that, okay, company A, B, and C are in the Russell 2000, they do this, and then figure out your other parameters, and then boom, you're invested in a way in the Russell 2000. However, another way that you can do it is by looking at exchange-traded funds or ETFs that track the index. There are a few of those. There's the Russell 2000 iShares ETF. Its ticker is IWM, so IWM for that. There's the Russell 2000 Vanguard ETF. Its ticker is VTWO. VTWO, that's the Vanguard ETF, and there's the Direxion Small Cap Bull 3x ETF, and that is listed as TNA. So you've got IWM, which is iShares, you have VTWO, which is Vanguard, and then you have Direxion, which is TNA. So there are a couple different ways that you can invest in the Russell 2000, but you can't do it directly. Like I said, you cannot buy into the Russell 2000. You can either do it with a tracking ETF, or you can find individual stocks that may make more sense to do. So there's kind of a brief overview of what the Russell Index is, how it works. Now you should be pretty well on your way to doing some trading and tracking small and mid cap stocks. And remember, make sure you visit Money Markets every day. We do track the Russell 2000. We will let you know kind of what its performance is, as well as we do with the S&P, with the Dow, and with the Nasdaq. And you can find out its movements that way. And you do that by checking moneyinmarkets.com, and it will give you a pretty good comprehensive look at all the markets, including Forex, including commodities, all that sorts of thing. And we're adding stuff to that website every day. So certainly glad you paid attention to this this Money Markets 101 series on the Russell 2000. And with that, thank you for joining, and we will talk again soon. Until then, safe trading.